Evolution AB just reported a bad earnings report, a horrible earnings report. In this video, we will go through all the information you need so you can make an informed decision. In this video, I want to go through the press release. I will comment on this one. You will have all the information and you will have my opinion about this one. And we will go through some slides, some Excel that I worked on so you can have a clear picture of what is happening here. We will go through a Twitter thread and we will look at what other companies are saying in this same industry. So this is it, guys. If you look at the latest data, I'm recording this video and the market is open. We are down 17%. So we are back to where we were 1 month ago, basically. This is not a huge meltdown, but I completely understand why the stock is down minus 15%, minus 20%. This was a horrible earnings report. I've been following Evolution for a while now, and I can say with clear confidence that something is happening over there. So take your time. I don't know how long this video will be. I have a bottle of water for you, and I think we can start. As I'm recording this video, the management has not released the investor presentation on the company, so the only information I have is the press release, and we will just go through this one. Okay, let me zoom in a little bit so you see better. Oh no, you know what, that's fine. Okay, very well. So this is for the first quarter of 2025, and the numbers are bad. Evolution is known for being a growth company that is growing 15% per year, 20% per year. In the past, they grew by more than 50% per year. And now the revenue is only 4%. The revenue growth is only 4%. Really, really bad. If you compare this to the past of the company, you completely have a deceleration of growth. I'm on Stock Unlock right now. I can show you what is happening. If you look at the revenue growth for this company, over the past decade, this has been a growth company growing 40% per year. Even up to COVID, it was growing 50% per year, very well. Now, since 2023, the growth rate has stopped a little bit, has been reduced a little bit to 20%. The management has been cheating a little bit with some accounting irregularities with earnouts, payouts, very, very good. But still, if you adjust some numbers, they were growing 10, 15, 10%. So now the estimates for today were very simple. Earnings were supposed to grow 10%, earnings per share growth 10%, revenue growth 10%. And now, instead of doing 10%, they did 4% revenue growth. So pretty bad, not even half of what was expected from them. You have EBITDA that decreased, margins that decreased, and the reason for all these bad numbers, you have several reasons. One is the proactive and self-initiated actions to ring-fence regulated markets in Europe. This was to be expected, right? We expected more regulation. And actually, in the past, shareholders wanted Evolution to operate in good markets, regulated markets. And Evolution said, okay, we will shift from unregulated markets to regulated markets. But if we make this shift, it will reduce our margins. So the reduction in margin was to be expected, frankly. This is not a big surprise here. More regulation, more white markets, more regulated markets in Europe, so lower margins. This is fine. The big shock is the revenue growth, actually. You have launched in third studio in New Jersey and second studio in Romania, so they are expanding as expected, no big surprise here. And initiation of a buyback program. No surprise here, we already knew this. And if you look at the small summary of their income statement, they have not cheated here. If you have not watched my reviews of the past quarters from Evolution, in the latest 2 quarters, they cheated on their revenue, which means they had an extraordinary revenue, a reduction in earnout liabilities, accounting as revenue. So they had a revenue boost. And I made videos saying, yeah, please be cautious of this growth, maybe adjust because of this extraordinary revenue boost. Now, strangely enough, when they don't cheat on their revenue, the growth is horrible and they are completely destroyed at the moment. So I don't want to go through this because I wrote it myself here with more details. So what I want to start this video with is the CEO comments, because that's quite important. I mean, when the company is in a bad shape right now, you want a good guidance, a good vision, a good culture. You want the CEO to address the key points and say exactly what they are going to do in the future. I mean, I've seen this many times. When the company is in bad shape, you want the CEO to, one, take accountability because they've done mistakes. So, I mean, that's part of life to make mistakes, right? So, one, take accountability. Two, get a clear picture of what the future will look like to reassure your shareholders that trusted you. So let's see if Martin is doing this. Okay, CEO comments, these are our numbers, very low growth in revenue and margins were down. The deceleration growth rate in the quarter is not only impacted by the development of the currency rates, but also connected to conscious actions we have taken that will be beneficial for the business in the longer term. Yes, you know this is a Swedish currency, a Swedish business, so the revenue growth is 4% for this quarter, but adjusted for the currency, like at constant currency, the revenue growth is 6%. A little bit better, but not what was expected. We expected 10%, so it's still bad, let me continue. Yes, firstly, we are addressing the ongoing issues with Asia, where we are implementing technical countermeasures to stop the criminal cyber activity, which has put pressure on revenue growth. Okay, so in the last 2 quarters, the company said that their big segment in Asia was under pressure because you had cyber attacks, like somebody stole their broadcasting service for some reason and delivering their games. So they said, okay, now we have a cyber attack, we'll have to invest more costs to defend ourselves against cyber attacks like this. So this was to be expected, no big surprise here. So more costs to defend yourself against cyber attacks. And actually, for the long term, this is great. You build a strong ecosystem that is safe without any cyber attacks. For the long-term view, this is pretty good. Secondly, and on top of what we have already done in the UK to meet regulatory requirements, yeah, in case you don't know, a few months ago, the UK regulation attacked Evolution, saying that they had bad practices, and instantly after this, Evolution was very collaborative to authorities. Again, I've made a video about this a few weeks ago. We have taken proactive and self-initiated actions in February to ring-fence additional regulated markets in Europe. Yeah, they are really collaborative when it comes to regulation. The effects have varied, with the largest negative revenue impact in markets where channelization is low. We have had constructive dialogues with all the large European regulators in the quarter and continue to support them in the ways we can. This is not the first time Evolution is attacked by regulators. If you look at the history of the company, they have been in this situation 2 times. So this is the third time it happens, and every time they were very collaborative and it worked out okay. It's just that now it's becoming bigger because Evolution is bigger. However, it is important to remember that channelization is... Oh, am I lagging? No, that's good. However, it is important to remember that channelization is primarily dependent on factors outside of our control, i.e. the ways in which the regulation parameters are structured. To create a long-term sustainable regulatory environment in which the end users are protected, while also having an entertaining gaming experience, is a balance of those parameters. And the next sentence is very important. The long-term picture remains intact. Regulation is positive and attracts new end users over time. But regulation must be done in a way that serves the needs of the players in each country. What you can guess from this sentence is they are not going back to gray markets. They will continue to expand in regulated markets. That means you can expect margins to continue to go down in the future. Act accordingly. As a consequence of the above, the profitability for the first quarter is on the low side. Yeah, obviously. We believe that the actions we are taking also will impact the second quarter. So they already expect a bad Q2. So in 3 months, the results will be bad or even worse. But the second half of the year will be stronger. Therefore, we keep our full year estimate of an EBITDA margin of 66 to 68%. I'm doubting this. If you want my opinion, I'm doubting this heavily. Because now the EBITDA margin, last year it was 69%, okay? Now it's 65%. And in Q2, maybe things will be worse, so you can get an EBITDA margin of 64 or 65%. If you have 2 quarters of 65% and you expect your full year 2025 of 66%, it means that for the second half of the year, margins should be very high, like 68%. If they continue to go in these regulated markets, I don't know how they can do it. I mean, they are clearly telling us shareholders, we are going to increase more the costs, more regulation, more collaboration with authorities. We plan to stay here for the long term. How can they increase their margins for the second part of the year? I don't know. And now something I don't like. In this context, I would like to reiterate our stance that we will always prioritize growth over margin, which is why we are continuing to invest also in times when we see short-term disturbances to our business. How can they say they are prioritizing growth when they only grow by 4%? I mean, I would have liked this report if you had a lower margin because of new regulation, fair enough, but still because of new games, new backlog, the revenue was growing nicely. Like 10% is fine. And people would have liked this report if they delivered on the numbers, like revenue growth of 10%, but lower margins. This is what people were expected, and this is what management has been telling us shareholders what they're going to do. Now results are far inferior, far worse than we expected. Let me continue. For 2025, we have the strongest product roadmap ever. I mean, they have so many games, so many backlog, wonderful, but still they don't grow. I mean, come on. How can you introduce new games with new traffic, new players at all-time highs, and still only grow by 4%? Strangely enough, things don't add up. Yeah. With more than 110 new releases that will further strengthen our world-leading portfolio. Yeah, I mean, their games are great. People love it. Their games are essential to the whole online casino industry. They are clearly the leaders. They are developing new games, introducing new games, clear roadmap with 100 new games, but still they don't grow. So this is a funny situation. Many of the headlines games were showcased at the IC in Barcelona in January with great reception from operators. Yeah, obviously. I agree with that. Among the successful launches, we have a few games, blah, blah, blah. We have a game very well. From our RNG brands, a total of 70 new games have been launched in the quarter. You have this, you stand at the best game in several years. We have upcoming releases, blah, 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 very well. Yeah, their games are good. I mean, they developed they introduced new games in Barcelona in January. Games are decent, very good. Our live casino offering exhibited 4% growth year on year. Despite the effects from the rig fencing and the cyber attack countermeasures, the underlying potential in both Europe and Asia remains solid. Let me spoil you the fun a little bit. I have this Excel, I have this Google sheet, and the revenue from live is here, 4%. And the revenue from the random number generation, RNG, is 3%. And if you look at the geographical breakdown, Europe is flat, minus 1% growth, and Asia is flat, 2% growth. So I don't really like their speech, actually. I don't really like their speech. They say, yeah, they are poised to growth, but to grow again, they remain solid, Yeah, I mean, if you think 2 or 3% is solid, this is very solid. North America continues to perform well. That's true. I mean, if you let me spoil you again a little bit of the fun. North America is growing 15%. So steady growth. North America is a very good regulated market for the future. And Latin America is growing very, very good, decently. We also believe activity in the region will increase, supported by the new regulation in Brazil. Yes, this is true. A few months ago, Brazil introduced a new regulated markets for Evolution, and Evolution is, for the moment, the leader in this country. So Brazil is a big country with the hundreds of millions of people over there. This will become a big market, and this will be a regulated market. So this is the reason why the share of regulated market for Evolution is growing. They are tapping into Brazil that is regulated. It can be noted that we have seen a jump in the total share of net revenues from regulated markets, which now stands at 45%. Maybe they are showing the evolution of this over time. I've seen it. Yeah, this one. Here you go. So if you want to know how much of the revenue is coming from regulated markets, compared to gray markets where you don't have a lot of laws, regulation. In the past, like 1 year ago, it was 39% coming from regulated markets, and now going up and up and up, and now 45%. Still half, less than half, but it is growing, and the management is clearly indicated that it will continue to go up in the future. So margins will continue to go down in the future. I mean, that was to be expected. Let me continue. To meet the global demand, we continue to invest in studios. In the first quarter, we have launched a new studio in Romania and a third studio in New Jersey. The studio projects in Brazil and the Philippines are on track to launch for the second half of 2025, and we will open a new studio in Michigan. As they open more studios in developed markets, the costs will be higher. Don't forget that the main cost for Evolution, as can be seen here, is the personnel expenses. The main cost for Evolution is the salary you give to employees. So if you open studios in Romania, Philippines, you have cheap salary, cheap labor. But if you open more and more studios in the US, the salaries will not be the same. So actually the expenses, the personnel expenses, can maybe grow a little bit more than expected in the future. Let me continue. For the RNG portfolio, No Limit City continues to be one of the strongest slot brands in the world right now. Yeah, of course, you are growing 3%. Yeah, I mean, the game is good. I've seen it. The game is great, but you are only growing 3%. And I mean, the RNG has been a bad segment for them. Difficulty to grow again. Everything has slowed down in 2022. And they are having a lot of difficulty to grow this segment. Let me continue. Our studio in Georgia. Oh, that's important, by the way, because last year in 2024, there was a strike in Georgia, and everybody was talking about the strike, lower capacity, difficulties with employees, and that was a big hit at the time. And since then, now nobody is talking about the Georgia strike. People don't care anymore, and in this paragraph they say that the chapter is closed. Our studio in Georgia continues to operate without disruptions, but with reduced capacity. In the latest quarter, they had the capacity reduced of 40%. So let's say half. They fired people and they cut the operations in Georgia, the studios. So they only kept half of the studio. But there was a big studio for them. It was the main studio was in Georgia, so it was a big impact. During the first quarter, so now, one of the big 4 accounting firms has conducted an independent investigation of the Georgian operations based on the allegations that were spread in connection with the strike last year in 2024. The conclusions of the investigation have been summarized in a report that clearly substantiates all that Evolution stated during and after the strikes on a range of issues, including salary levels, strike participation, and workplace environment. This third-party report has now been distributed to the unions and relevant authorities, and for Evolution, the strike is now a closed chapter. So it was a temporary issue. I made videos in the past year saying that this is just a temporary issue that will be fixed. Now we have the conclusion, it is fixed, and there is no problem with a strike in Georgia. The Evolution team is now 22,000 people. They continued to hire new people. They hired people in Michigan. Yeah, this is what we said previously, right? They hire people in the US with a higher salary compared to Georgia. Okay. Needless to say, I am not happy. Oh, this is interesting. This is a comment from the CEO, clearly saying that he is not happy with the financial development in the quarter. But one must take into account that the results are impacted by necessary steps that contribute to our mission to ever increase the gap to competition. The philosophy of Evolution is to be the leader, is to grow fast, is to be efficient, and to increase the gap with competition. This is the reason they have a moat. They have such great games if you compare to competitors like Playtech, for example. Their games from Evolution are better. So they are continuously investing in new games, better customer experience to increase the gap between them and competition. And their mission, as is said here, is to continue to increase the gap between competition. It takes hard work in all areas, staying ahead in the ever-changing regulatory landscape, being an attractive employer around the globe, moving our technology to the cutting edge, and offering the best product in the world. The road cannot be always straight, but what is crucial is that we learn from the challenges we face and relentlessly adapt and strive to make Evolution a little bit better every day. Yes, I mean, not a lot of color. No, you can't read between the lines over there. The CEO is saying that he's not happy with the results, but these are investments that are needed if you want to go to the next step of Evolution, the next step of being a global company about regulated markets. Yeah, I would have loved to have an additional paragraph about the vision for the company on a positive note, but that's just a personal taste. Like on a positive note, what they plan to do, the move they are seeing right now, they have becoming a leader in the regulated markets in the US. So yeah, that could have been a good paragraph to add. And financial performance. So you know what, let me show you the numbers so it's clear for you. You came here for the clear picture about Evolution. Let me show you the numbers. Okay, maybe I can zoom in a little bit. Zoom in. Okay, very well. So I'm comparing the numbers of this quarter, Q1 2025, to Q1 2024. Okay, you have two segments: the live casino that is growing 4% year over year, and the RNG only growing 3%. I mean, you can check the past of the company. The growth rate was much higher, and I can even show you what I mean. This is the growth rate of the live segment. So what has grown by only 4% today. Look at this in the past. In the past, even 2 years ago, in 2022, the growth rate was 40%. And then it decreased to 20%. And even in the latest quarter, they were growing 13%. I mean, that's fine. This is a company, a stock trading at a PE ratio of 10. So having a growth rate of 13% is fine. You have a good deal. But now the growth rate is only 4%. And even if you adjust for currency, the Swedish krona, it's 6%. So even if you put the currency, the growth rate has been cut in half, quarter over quarter. Yes, this is pretty bad. I don't like this at all. Maybe the investment thesis is broken just because of this. Or maybe this is just a one-time issue and today is their worst quarter ever and they will recover and this is the bottom. We've seen these examples. I can give you some examples with meta platforms. In 2022, when you have these stats of users Like they have 3 billion users. And for 1 quarter, the number of users for Meta platforms, Facebook, it decreased for 1 quarter. So people panicked. You know what? Mark Zuckerberg is a genius, and the next quarter it came back to growth, and it was a beautiful time to buy. When people were panicking, it was a beautiful time to buy. Same thing with Netflix at the end of 2022. They had one horrible quarter of decline in users, subscribers, like no growth at all. And then the next quarter, everything improved again. So it was also a good time to buy. Maybe we are in this situation of having a horrible quarter, horrible, and this is a beautiful time to buy because things will recover. I disagree. This is my opinion. Maybe you don't, you disagree, but maybe you think it's a beautiful time to buy. I think the Q2, the quarter we will have after this, will be even worse because they clearly say that they will continue to invest, lower margins, higher costs, etc., continued expansion. So I don't think this is a blowout quarter that is as bad as we've seen for Meta platforms and Netflix. I think they can do worse. But yeah, I mean, without guessing, you can only look at this growth rate and it is clearly going in the wrong direction. I would have loved to see only 10%. 10% is fine, but here 4% is just horrible growth. And the CEO is clearly saying, I'm not happy with financials, but long-term picture remains intact. Yeah, we will see. The picture for evolution is intact, yes, but now stocks are down on the year. The S&P is down on the year. So you have deals. It's not as if everything was overvalued now. I see other deals in this market. So I'm really thinking about cutting the position and moving the proceeds or what is remaining to elsewhere. So yeah, I mean, this is a different picture. The investment thesis has completely changed. I bought Evolution because of the growth rate and because of a broken stock with a PE ratio of 10, 15. But now, seems like the market was right and I was completely wrong. Seems like over the past few months, I was completely wrong and the market was right to discount this one. As I'm speaking, the stock is down 18% now. Wow, that's a big shock. This is the first time we've had such bad quarter in a while for Evolution. Now you have this line, other operating revenues. I told you a couple of minutes ago that Evolution has cheated in the past 2 quarters when they added extraordinary revenue because of a reduction in earnout. Let me do a quick summary in case you didn't watch this video. In the past 2 quarters, they had a line here. They had something that was not zero, it was a plus, like extraordinary revenue, because it was a reduction in earnout liability. In other words, they made acquisitions in the past of an RNG segment, like they acquired a competitor, and how you acquire a competitor is 2 ways. One, you buy cash, and then you make a bonus. For example, you buy a competitor with a slot game, you pay $100 million of cash, and then you say you will have $100 million additional dollars of bonus if you perform well. So here are your targets for the next 3 years. If you meet these targets, you will have an additional bonus. This is called an earnout. And for the past 2 quarters, they publicly shared that the targets were not met. So the results are worse than expected from the acquired companies. So because the targets were not met, we are reducing the bonus we will give them. So how do you make a good accounting of this? If you reduce the bonus that you should have paid to the acquired company, this is an additional revenue. This is a little bit tricky when it comes to accounting, but if you pay a bonus, it is a cost. So if you reduce the bonus, you reduce the cost. And if you reduce the cost, you increase the revenue. And they put a line here, other operating revenues, extraordinary revenue. So something that should have been paid to the acquired company will not be paid. So this is as if you have an additional revenue. Anyway, this was cheating for the past 2 quarters, and now there is no cheating. So you can't lie on the numbers, and you are faced with the harsh reality of only growing 4%. Fair enough. And by the way, I made videos for the past 2 quarters, 3 months ago and 6 months ago, and we had this table on Google Sheet, and I told you, adjust for the extraordinary revenue. What is the growth rate with the cheating accounting, and what is the growth rate without the accounting cheat? And the picture was clearly different. Okay, so you have operating revenue, so normal revenue, only growing 4%. And now this is the bad stuff. Personal expenses are up 12% because they are hiring, because they hired a big 4 company, Deloitte, to investigate on the Georgia situation. This is another cost. Because they are going into regulated markets, higher cost. Because they are going into the US, higher salaries. So they are hiring and hiring more experienced personnel in more developed countries. The salaries are going up 12%. The DNA impairment, roughly the same, 13%. And other operating expenses, 21%. So in overall, the operating expenses for the business are going up by 15%. So this is bad. Revenue is only going up by 4%, but costs are going up by 15%. Overall, you have operating profits that is down. Maybe this is the first time we have operating profit that is being down. Let me check on Stock Unlock. By the way, Stock Unlock, great website. You have a link in the description below if you want to discount. Operating income and loss. Here you go. Oh, this is not adjusted for today. Okay, fair enough. Fair enough. If you look at the growth rate of the operating income, what can you see? This is in blue here. So this, even when this is EBIT, right? Operating income. Even when it was bad, here in 2018, it decreased. So it's not the first time the operating income is going down year over year. In 2018, it was down -5%. In 2016, it was down -1%. And in summer 2024, it was flat. Okay, so this is the 4th time we have a decline in operating profit. It's not the first time, don't freak out, but it's still bad. And what about the operating margins? You have operating margins year over year that went down from 62% EBIT margin to 58%. That was to be expected, but this is it. This is the cost. Look at this, the salaries. And my strong guess is it will continue to go down. And what is the bottom for margins? It can go down from 58% to 55% to 50%. What is the long-term margin prospect for this one? Yeah, this is also why I don't trust their guidance for 2025. They think they can become more efficient in the second half of the year and improve the margins, but I don't see why. I don't see why. Maybe I'm completely wrong and they will be very efficient. Good for them, wonderful. But I don't have much confidence on this. And then you have financial items. This is a small adjustment, but in the past quarter, the financial items gave them a little bit of profit. It was in the positive, and now it's negative. So year over year, that's the financial items. So what they have on their balance sheet. In other words, okay, let me explain. Evolution AB doesn't have any debt. They have $1 billion of cash, so cash heavy. And what do you do with the cash? Either you pay your dividends like they are doing, or you invest in stocks. You have a stock portfolio or a bond portfolio. And Evolution has a bond portfolio. Let me show you. I mean, I don't know how long this video will be. The goal is just to give you as much information as possible. Look at this. On a year over year, this is the balance sheet of the company, and you have a bond portfolio here, okay? And so they invest in bonds with their cash. And last year, they produced earnings with this bond portfolio in their balance sheet, and now losses. So this is a bigger drag on profits before tax. So if you adjust for this, even if you add everything up, you have profits before tax that were going down by 5%. And now what about the taxes? The tax rate increased. So you have a third thing that was going in the wrong direction. The tax rate in the past, if you don't know, Evolution AB is based in Malta, and in the past like before 2025, the tax rate was 6 or 7%. And then a new law passed, and now, starting at the beginning of 2024, the tax rate is not 7%, but it's 15%. So it's a double in tax rate. So now you can't play around with the numbers. You can't adjust. The new normal tax rate is 15%. And even year over year, the tax rate increased slightly. So you are not helped with the bond portfolio. You are not helped with your currency. You are not helped with the tax rate. You have the trifecta of small things that add up and put the results even worse. Yeah, this is bad. So the profit for the period, the normal profit, is minus 5%. And that gives you a net margin that has gone down from 54% last year to now 49%. So that's a reduction in 5 percentage. Good thing is they did some buyback. What is expected from them? The stock is down, so they delivered a new buyback program. They said they were going to buy $500 million of shares. Yeah, and this is as expected. They did a buyback of 4% of their shares. So profits are down 5%. Number of shares are down by 4%. You adjust this for that. That gives you an earnings per share that is flat. Flat, minus 1%. All this hardware for being flat. To give them some credit, they are in a bad shape. So you have a cyber attack. So you had Georgian strike. You have more competition. You have regulatory changes, and still it is flat. It's not as horrible as you would guess. I mean, earnings per share could have dropped minus 10%, but it's just not what we signed up for, right? We invested in evolution because of the growth rate. So now if you don't have any growth rate, why do you invest in evolution? I hope it's short term for them. Now I want to talk about the geographical breakdown. This is year over year growth. In Europe, zero growth. In Asia, zero growth. You have cyber issues. Yeah, I mean, you can blame everything. Cyber attacks, regulation. Maybe the market is saturated in Europe. Maybe the whole industry is bad. You can blame whatever you want. In North America, plus 15% growth, steady growth. So actually, you can cross-read this with the results from Caesar's Entertainment. Normally, it should be zoomed in for you, so you should be able to see very well. Look at this from Caesar's Entertainment, the gambling company, in Q1 2025, and what they have said in their earnings call. They are clearly saying that the iGaming segment is up 50% year over year, 28% volume growth. You have branded live dealer casinos, life is good, new Pennsylvania law, amazing. So things in the US are going in the right direction. But for the rest of the world, so flat. So if you want to invest in evolution right now, you are watching this video because you want to buy, maybe a good thing for the future is the American market. Yes, it will lower the margins, It will lower the margins because of higher salaries. But secondly, what is great is the growth rate. It's becoming pretty big. And now it's 70 million. If it doubles, it will become one of the biggest segments from the company. So, I mean, how long will it take to double if you grow 15%? If you grow by 14% per year, you double in 7 years. That means you have to wait 7 years before it doubles to a good level. That's a little bit long. Anyway, you have Latin America going up 10%, but it's so small it doesn't matter. It's only $30 million of revenue, and others we don't really care, plus 20%. So the net revenue for the period is up plus 3.7%. Yeah, this is bad. This is really bad. So some takeaways I have for this quarter. This video is not finished, but let me do a quick break here. No growth, pretty bad. We all agree on this one. But still, if you want to invest in evolution and you are watching this video, you are paying a PE ratio of 10 for a business that is stable, profitable, 50% net margin. You have a 4% buyback yield. and a 4% dividend yield. Let me just check what I'm saying. Dividend yield is 4% right now. Yeah, 4%. So this is not incredibly bad. Just know what you buy, right? And for some reason they have a bond portfolio in the balance sheet. Yeah, this is quite strange. I don't know if they only invest in bonds or do they also invest in stocks. I'm not sure. So before I go to the next step, I want to go through the other slides, other pages. I have highlighted some things, and then we will continue so you have a big picture overview. Financial performance, revenue growth adjusted for changes in foreign exchange rate is estimated to be 6%. So yeah, if you adjust for the currency, you are growing a little bit more. Still underperform, still worse than expected. Expenses. Expenses were mainly driven by higher costs for personnel connected to the launch of new tables in the company's studios and the expansion in general compared to the first quarter of 2024. And as they continue to expand more in the US, the salaries will be higher. Okay, let me scroll down a little bit. Investments, the capex is the same. Online casino market. Okay. The global online casino market has grown strongly in recent years and is expected to continue to be among the fastest growing gaming segments in the coming years. I completely agree. If you look at the next 20 years, more and more casinos will be operated online. For my generation and the next generation, we will not go to the brick and mortar casino. I mean, we will go more and more online because we are a digital generation. So more and more casino development will be online, so they are really well positioned for the next 20 years. Evolution's growth target is to grow faster than the total global online casino market. Market growth is influenced by several underlying factors, such as technological advances with, among other things, improved hardware and increased bandwidth, the migration of land-based casinos to online environments, and market regulations. Increased use of mobile devices has been a growth driver for many years, and in the first quarter, 72% of the operators GGR via Evolution's platform was generated by mobile devices. 70% of their operations games are from mobile, and it is increasing and will continue to increase maybe in the future. Okay, RNG is the largest vertical in the online casino market. Okay, but it is not growing very well. This is the share of regulated market over time. This share has grown. In the past year, it was 39% of revenue coming from regulated markets. Now it's 45%, and it will continue to go up. Let me scroll down. Employees, look at this. Now they have 22,000 employees, and last year they had 20,000 employees. So they added 10% more employees. This is also the reason why the personnel expenses are going up 12% and not 5 or 6%. I mean, if you increase your headcount by 10%, the cost will go up by 10%. So if you, it's not 10%, it's 12% because you hire qualified people from developed countries. Okay, very well. That's the risk, that's the dividend, that's the buyback program. We already knew about this one. Very well. Let me scroll down a little bit so I don't miss anything. What good thing that is a silver cloud? I don't know what's the English expression for this one, but a good thing out of this report is the cash flows, because they have some working capital working for them. Where is it? That's the income statement. That's the balance sheet. And that's the cash flows. Okay. That will be a little bit tricky, so let me do a quick overview of this one. The cash flows that the company is producing. So they start from operating profit. This is the first line here. And it's decreasing a little bit year over year. Very well. Now you add back depreciation. This is how you look at a cash flow statement. Interest received, it's a little bit lower. Interest paid, tax paid, very well. Now look at this. The cash flow from operating activities is fairly stable. So We all talk about decrease in growth, lower margins, but if you only look at the operating cash flows, it's stable. It's not declining by much. It's stable. Things are not as bad as people think. Now you have an increase in account receivables. Last year, this was a cash outflow, minus 50 million, and now it's a cash inflow. So clearly they are playing around with their working capital and getting their money faster. So clients were supposed to pay Evolution and they paid Evolution. So Evolution received more cash during this quarter compared to last year. So this was a negative last year and now a positive. Maybe this is what is saving them today. And this has not changed. This has not changed. So from the cash flow from operating activities, they are up year on year, just because of working capital. And after this, you have the capex. Capex has not changed at all compared to last year. This is why I expected. No capex change, and then repurchase of shares. Okay, a little bit, very well. So now they have some good cash on their balance sheet. What will they do with the cash? First, they have a dividend payout ratio of 50%. So they will use half of their earnings and pay a cash, pay some good dividends. Secondly, they have, as we said, a bond portfolio. So they will continue to accumulate cash on their balance sheet and invest in bonds. Maybe they will make money, maybe they will lose money, only time will tell. And after this, they will do some buybacks. So in the coming days, maybe they will resume the buyback program and continue to buy back their shares heavily. And I would love to see them increase the buyback program. Now they bought back 4% of their shares. Maybe it can go up. I wish it goes up. Okay, let me check a message. Okay, fair enough. Thank you. Okay, now some notes. They are proactively pulling back from gray areas to focus on regulated markets. This is a drag on performance. The share of regulated revenue jumped, but revenue growth slowed, and the European market is not growing anymore. The company continues to prioritize growth over short-term margin preservation, with over 100 new games for 2025. This is what we highlighted just above here. I mean, I don't understand this. Frankly, they are saying that they are prioritizing growth of 4%. So am I saying something wrong? But I don't understand why they are saying this. Please don't say this. Say that you are prioritizing regulated growth. That would have been a better word. So I don't know what they are saying growth when they don't grow. Q2 is expected to feel the impact on ongoing adjustments in Europe and Asia. Yeah, I mean, they will continue to invest massively to defend themselves against cyber attacks in Asia. So you can expect more costs for the Asian markets. And secondly, more regulation in Europe. And thirdly, more cost in the US. So in Q2, actually the margins will go down. This is what I think. Maybe I'm wrong. But in Q2, I don't expect the margins to recover. However, the management is confident that the second part of the year will be stronger, will have stronger performance as new studios and games ramp up. I don't believe so. If you look at the history of Evolution, they have been saying the same stuff in 2024, saying that H1 will be bad, but H2 will be better. And then a few quarters went by and the results were not recovering. So during H2, semester 2, the second half of the year, they said, oh, H2 will be bad, but the next semester 1 of 2025, will be good. Seems like they are postponing the recovery again and again. The CEO says focus on growth above margin and still aiming to widen the gap to competitors. Yes, I don't believe their guidance. Frankly, maybe I'm completely wrong and I have to give more credit to the management team, but I don't believe their guidance because of what they plan to do. What they plan to do in the future for all the costs we highlighted a few minutes ago. So the next question is this turnaround play similar to Meta Platforms in 2022? I made a video a few weeks ago, a few months ago, saying maybe evolution is similar to Meta platforms in 2022, and maybe we will, the stock price will recover exactly like Meta platforms. Meta platforms, Facebook in 2022 was going, in 2022 it was going down and down and down, and bad results, bad traffic, and then boom, everything flipped, and it was a great time to buy. The difference I said in this video was the quality of the management. Mark Zuckerberg is known to be fierce and shareholder oriented and a beast when it comes to efficiency and being a copycat at what works. And I said in this video, the management from Evolution is not Mark Zuckerberg. You don't have a genius at the helm of the company. So maybe the key difference between the recovery or not is the management team. And if you really look at the data, the stock for Meta platforms dropped between September 2021 and November 2022. So it's what? 1 year and 2 months. And in 1 year and 2 months, they entered panic mode. Mark Zuckerberg said, no, let's change this. Let's not burn cash now. Let's become efficient again. So they made a beautiful turnaround play in 1 year, 1 year and a half. Now for Evolution, it's been more than 1 year, 1 year and a half. It's been a few years now, more than 2 years, maybe more than 3 years, or let's say 2 years because of late 2022. So they are taking twice as much time as Mark Zuckerberg. So this is what we said in this video a few weeks ago. The quality of the management will dictate if this is a good time to buy or not, if they will recover or not. And I want to show you 2 Twitter threads that are great value, and you can follow them on Twitter. This is great. Ali here, expert on Evolution AB, and he made a few posts. And okay, he talks about the bad. Both sales and live casino sales shrunk quarter over quarter for the first time in Evolution's history. Europe gave back 1 year's growth due to rank fencing. RNG gave back growth. For the latest quarter, RNG was finally growing, and it was a key highlight. I mean, it was growing like 8%. Finally, the bad segment was coming back to growth, back to recovery mode. It was amazing, and it was growing 7 or 8% if my memory is correct, but it was recovering, and now they are back to not growing at all. So too bad. Low growth plus high expansion equals lowest gross profit since 2021. Last 12 months EPS shrunk for the first time. For the first time? Let me check. Again, stock unlock is great. Earnings per share, last 12 months, if you adjust for some stuff. Last 12 months. So you have an earnings per share, apparently, that will be shrinking for the first time ever for Evolution AB. Yeah, too bad. I mean, if you don't cheat with your numbers, this is what happens, right? Okay. Let me continue. Now the good. If you want to be reassured. High studio expansion. If Evolution wants to be the leader in its category, it must invest massively in new regulated markets. So high studio expansion will mean higher revenue in the future. Highest regulated share for post-COVID. I mean, the regulated share was what, 45%? It can go higher. It can go to 60%. So margins can go lower. Asia neither returned to growth nor collapsed. This is a good point. This is a good point from Ali, because 2 quarters ago, when Evolution said that there were attacks, cyber attacks on Asia, people said that the revenue will go down, but revenue is stable. So that's a victory from Evolution. The revenue from Asia didn't completely collapse. Good cash collection. As we said from the cash flow statement, it's all about working capital and receivables. So this is short-term move, but still the company is generating some good free cash flow. By the way, if you want the free cash flow of the company, let me go down. Cash flow, here we go. How do you calculate the free cash flow of the company? You take the operating cash flow minus the capex. Look at the operating cash flow here. fairly the same year over year. And this is the cash flow, the capex of the company. So the operating cash flows are the same year over year, and the capex is the same year over year. So the free cash flow of the company is the same year over year. Yeah, it's not collapsing. And add to this a small inflow of cash from receivables. Okay, yeah, I'm not really convinced. The cash flow is increasing, but not for the right reasons. People will maybe talk about this on Twitter. Be careful on YouTube or Twitter, saying that the cash flow for the company are increasing, but maybe it's just because of this line. This is a increase accounts receivables. So when clients pay you, clients promise to pay you, pledge to pay you, and they finally pay you. So you receive some money. Yeah, this is short term. It can change for next quarter, and you can go back to negative territory. So I'm not convinced. Good cash collection. CEO admits bad financial development. I would have loved to have an app or a SaaS to ask the website all the times the management apologized, all the times the management admitted bad financial developments, to check the tone of management. I don't know if there is an app or a website that does this. I would gladly use this service to check if this is the first time. Because from my shareholder perspective, this is the first time the CEO admits such bad results. Maybe it's not the first time, but from what I see, this is the first time. So this is a panic mode territory. Another company, if you want this kind of tone, is Technion. Technion stock, same thing, Swedish company, and the latest earnings they reported were bad. The report was horrible, and they clearly said publicly, we are ashamed of ourselves, we will do better, we had bad results, our mistake, we apologize. This is good. You want accountability when you make mistake. It happens. You can't grow on straight and to the right, up and to the right every year. So it's good to have such management teams. So that's the good. That's the good of good honesty from the CEO. Here is a bit of a self-criticism by a shareholder of 5 years. So Ali has been investing in Evolution for 5 years now, and when he thought between mid-2022 and early 2024 that the market was wrong and grossly undervaluing Evo at a PE of 20, the market was right and I was wrong. Same thing for me, guys. Same thing for me, guys. I bought the Evolution at a PE ratio of roughly 15, 16, thinking it was a crazy deal because the company was good, efficient, etc. So I was wrong, same camp as Ali. And look at the PE ratio over time. This is the PE ratio of Evolution over time. In 2020, it had a PE ratio of 30. In 2022, it had a PE ratio of 20. And now we are at a PE ratio of 10, 11. And the market was apparently right to think that earnings growth will stop. Yeah. My mistake, our mistake. I mean, this is part of life. And there is another Twitter threads I want to show you. This one. Oh, this is this one from Caesars. So this is very strange what is happening for Evolution, because if you look at the traffic, the number of players by games, it's at all-time highs, going up and to the right in the wrong direction. In the wrong direction. If you look at the US development, great news, new development, Pennsylvania, new laws. And even if you look at deep information like this, like you track the number of players day by day, there is somebody on Twitter that does this, that's great. It doesn't show in the results. This is quite frustrating to make such deep analysis and still be disappointed by the results. This is my situation right now. I spent hours and hours on Evolution, and still I was surprised this morning when I saw this report and saying, oh wow, this is bad, this is really bad. So in the latest video, on the latest quarter, I made these points. I hope you see well, that's enough zoomed in. And we talked about the risks for 2024, the risks for 2025 and 2025 ahead. and we talked about what was the big things happening for Evo in 2024. The regulation, the strikes in Georgia, the cyber attacks in Asia, the change in CFO, and now nobody cares about the CFO, the new tax rate that I talked to you about, from 7% tax rate to 15% tax rate, and the slowing Asian growth. So what happened? We said collaboration and focus on regulated markets is good. It's correct. This is what is happening. My second guess was a focus on growth. This is what the management expected and said publicly. Seems like they are not providing any growth at the moment. So fail. Third point is growing online casino market. Yes, but you don't take advantage of this one. The online casino market is growing overall, like the big industry is growing, but Evolution is not taking advantage of this. Continued growth in RNG. This is what we said previously. In the last quarter, the RNG was growing 7, 8, 9%. So we said, yeah, good recovery, guys, congrats. And now they completely failed. Fourth point, they want new studios, they deliver. They said they will do buybacks, they delivered. Dividends, they delivered. Almost no strikes, this is correct. No major acquisition, this is correct. And the same capex, yeah, we've checked it, you have the same capex. Now let's talk about the risk for 2025. What did we say at the last video? We said decreasing margins because of regulation, correct. Slow regulated markets, absolutely correct, no growth. Continued cyber attacks, yes, this is right, and this is impacting the costs and the margins. I said no Asian growth, which is a high margin market because it's unregulated. This is exactly what is happening. So the way they have beautiful margins is because of Asian growth. Here, if Asia is not growing, the most profitable segment is not growing. So you have your most profitable segment that is not growing. So that's something that is dragging your performance. And on the other side of the coin, you have the European market with more regulation. So things are dropping again. This is bad. This is quite bad. Let me continue. And then top 5 customer concentration is 46%. Yeah, nobody cares about this right now. Nobody cares about the concentration. So, I mean, that was a hell of a report, as we say. And I have some comments for you. I want to apologize for everyone who bought the stock after watching my videos. I made plenty of research on this one and really thought that the recovery was here, because I believed in the company. And I want to say I apologize to everybody. I'm sorry if you bought Evolution because of my videos. I take full accountability. I mean, I post public videos, so it's also my job to be cautious about what I say publicly. Guys, that was unexpected. So I'm sorry for everyone who bought the stock after watching my videos. I take full accountability on what I publish, and this was a mistake. Clearly, this was a mistake to yeah, that's sad. And maybe this is the bottom. As I said previously, maybe this is the worst quarter they will ever report. And this is like Meta Platforms or Netflix, and this is the absolute bottom. Or maybe not. And maybe Q2 will even be worse. And if Q2 is worse and earnings go down, wow, the stock will crash, will be devastated. I think, I mean, this can be even worse. Now, what is bad right now is we thought the company was going to grow, and now the growth is near 0%. But it can get worse. Growth can be negative. The earnings can continue to go down. And if earnings go down by -5%, -10% in Q2, it will be horrible for the stock price. So I don't know at all, and nobody knows actually. So maybe this is the bottom, maybe not, and I don't know. I bought the stock in December 2023. What was the stock price in December 2023? It was here, about at 1,000. 1,000 here. Instantly made money on this one and lost money and lost money and lost money and lost money, and doubled down on this one and lost money, and tripled down on this one and lost money. So bad timing. Yeah. And when facts change, I'm flexible and willing to change my mind. This is also what is important in investing. You don't want to be too strict on your investment philosophy. So I bought Evolution because of the growth, efficiency, margins. Growth no longer there. Efficiency so. Margins decreasing. Facts have changed for Evolution. And I had 15% of my portfolio on this stock and lost money on this one. So for all this research, hundreds of hours of research on Evolution, Evo is becoming a turnaround play that is harder than expected. And I thought that it would come back to growth sooner. For the RNG segment, for example, I expected some good growth over there. Seems like it's harder than I expected. So maybe, what did I say? Oh yeah, I bought the stock in December 2023 and sold half today. I mean, when markets opened today, here, full disclosure, I sold here. I sold the bad timing. I said I want out. So it was, it was 15% of my portfolio, and then the stock went down. So it was 10% of my position because the stock went down. So now, as I'm speaking right now, I cut the position from 10% of my position to 5% of my position. And I'm thinking about selling all. And I'm still thinking about this one. We will see. I will update you guys. So for all this research, Evolution is becoming a turnaround play that is harder than expected. Too hard pile. And I thought they would come back to growth sooner. So maybe I will sell the remaining position and buy other stocks. Because now the Nasdaq is down, the S&P 500 is down on the year, and I see some deals. So maybe the best thing to do is to sell Evolution and buy other deals. Because I see other deals. I mean, you have some specific companies available at a good price that don't have as many problems as Evolution has. Available at a PE ratio of 10, 12. So same valuation, but better situation. So maybe this is what I will do. I don't know for the moment. Now I know that I sold like 5% position, and I will use this money to invest in these high quality assets that are better available at a good price. So maybe I will sell the remaining. I will update you. So maybe this is the bottom, and I know I will look dumb, stupid, if the stock is a double in 1 year. If the second quarter is amazing and this is a beautiful turnaround play, I will be stupid and people will comment on this video how dumb you are. I know, this is life. I mean, I take the risk on publishing online. It happens. So maybe this is the bottom and I will look dumb if it's a double in 1 year and a beautiful investment. Please do your own due diligence. Don't follow public guys blindly. I mean, we also make mistake. We make videos on YouTube to comment on our positions and chat about stocks. We don't know everything and we also make mistakes. I've spent hundreds of hours on Evolution and still lost a lot of money on this one. It happens. You can't have a 100% hit rate. So this was a mistake. Evolution was a mistake for me. Maybe I was thinking that I was too smart and thinking that the online casino market was inside my circle of competence, and I don't know. Maybe I thought all the problems were temporary, but it seems like the management is not executing fast enough. Maybe I was thinking that the management was okay, as good as Mark Zuckerberg, but you only have one Mark Zuckerberg. You only have one Facebook. You only have one Netflix that can make a quick turnaround play in 1 year. Maybe the stock will double in 1 year and I will look completely stupid. Or maybe the stock will do nothing for 1 year, 2 years, and I will be happy I have sold. Nobody knows. No, that's life in this market. So frankly, I apologize to everyone who believed in me and followed my videos and bought. You can comment on this video below if this is you. Sorry, if you want to insult me, feel free to do so. This is my responsibility, and this is a mistake for me. So I will let you know if I sell the remaining of the position. But one thing that is for sure is I will not buy more Evolution. I'm not happy with how this story is developing, and this is a good time because the market is down at the moment. So I can buy other things in which I have more confidence and maybe more expertise. This is very frustrating because, as I told you, I track the traffic, the number of players, all the numbers, the qualitative aspect, all the data, the lawsuit against Evolution that was recently revealed. So these are all good news. So things go in the right direction if you go deep, but still the company is having difficulties. This is a horrible situation, and maybe I'm not patient enough and I will look dumb. Nobody knows. So I hope this video was helpful, guys. This is a full analysis on this quarter. This was a very bad quarter. Wish them the best. If you still hold now, or if you want to buy more, I wish you the best. I wish you the best. Maybe take this video for whatever you want. Maybe this is the ultimate contrarian indicator, and this is the ultimate bottom. If a YouTuber says publicly that he's selling the position, I don't know. No, everything can happen. Anything can happen. I'm just a retail investor like you. So, wow, this was a mistake. We'll see. I'm very curious. I will follow the stock. I mean, I'm still a shareholder, right? So I will follow what is happening in the coming months, coming years. This is a very interesting business model. If they pull this out, and if they reach their goal of being the leader in regulated markets with net margins that will be decreased, right? But net margins of 45%, 50%. And if they can come back to growth of 10, 15% growth, it will be great. And maybe I will buy it when I start to see some good quarters in a row. But now I'm not tempted at all to buy. I was patient enough for 2 years with them, 1 year and a half, 2 years, and seems like the situation is getting worse and worse and worse. So good luck to everybody who is still holding. Wish you the best. Wish you make a lot of money on this one, but I'm no longer on your team, and maybe I will sell the remaining part of my position. So that's it. I hope this video was helpful, guys. Don't hesitate to comment, share your story, or share additional information if you have. I told you some information about the company, but maybe you know more than me. So that's it for today, guys. I wish you a nice rest of your day. Goodbye.